Hey everyone, this is Kirk here again at Option Alpha. So in this video, I want to go through a PEG research-based automation and bot template that I've been running. I've actually shared this a little bit before in some of the live workshops that we've done, but I shared this one in the community now, so it's available in the community to go ahead and take a look at, create different versions from it, ask questions, share your own version back to me if you want to. As a new template, would definitely love to see what you guys create out of this. But this is my version that I've been running. I have been running this live. I call this my 0DT Ninja because Ninja just sounds better than like 0DT Turtle or whatever. But it's all based on PEG research. Now, it doesn't have a lot of trades just yet. It's only done 44 positions. Again, these are all live positions, but generally speaking, the metrics have been good. Average loss been about 147, average win about 196. That's about what we would want. We would want to be a little bit lopsided on this based on the PEG research. And profit factor just over 1 right now. But again, very early in this, you can see it's definitely starting to go through its cycles and learn how to trade and kind of get trade count up, which is really important. So, but I want to show you how this one works and how I use the PEG data to create what I call a waterfall scanner. Now, I've seen people do it different ways. I just call it a waterfall scanner. You could call it like an accordion scanner or whatever you want to call it. It's just a concept of going through, like having the bot go through a progression of looking at different types of positions. And the way that I did it in my bot template is I did it from outside in. So basically the furthest out possible iron condor based on PEG research for an SPX 0DT trade. So the furthest out possible iron condor and then progressively going in. And you can see this not only in the scanners that are listed, but also just in the way that the scanners are kind of built out with this kind of waterfall progression inside of the decision framework. So before I jump into that though, I want to show you a couple quick things which I think are different, maybe unique, maybe you guys do this as well. I like doing this in some of the bot templates that I run. But the first thing that I have here is this morning automation that runs, and I call it my morning approval process. Now this runs every single day, Monday through Friday, skips market holidays because we don't trade on market holidays. But it basically just runs right after the market open. And the way that I run this is I treat this as my approval process for if the bot can trade for the day. And so you could add this approval process to any of your bots if you wanted to. So it's kind of like a plug and play addition if you get the template. But how it works is it basically goes through right at the morning open. It resets all the bot tags. So just basically clears the deck for the bot tags. And then after it resets all the bot tags, it goes through my morning pre-market pass checks, whatever you want to call them. And this is essentially where you would add all of your different criteria that would set if you wanted to trade today. So in my case, I said it's not an FOMC meeting today. So I don't want to trade this bot template on an FOMC meeting. We've done videos on the strategy I use now for FOMC meeting days, but this particular process we don't want to run on an FOMC meeting day. We want to do it on a normal market close day, so not an early close. Of course, we want to make sure the bot can open a position. It doesn't have like a position that got held over or a 1DT position that I manually got into or whatever the case is. You can add, remove this. And then I also set a VIX filter, so I don't want to trade this on an insanely high volatile day. You could add other ones like CPI or other ones in there if you wanted to. But again, you just want to get all of the criteria that would say, look, if any of these are true, then do not let the bot trade for the day. So if it passes the pre-market check and the answer to all those questions is yes, that there's none of that stuff, it's not a Fed day, the VIX is low, whatever the case is, then it tags the bot approval granted. And I like doing it this way because then I know that the approval has been granted if the other isn't true, which is that if something happens and let's say it's an FOMC day like it was the other week, then the bot gets tagged approval denied. And basically I send myself a quick little notification that says, heads up, I won't hunt for any 0DTE trades today due to market conditions. Could be whatever the case is, but at least you get notified. You know that your bot's not going to be trading for that particular day. And so you either tag the bot as approval granted or approval denied. Okay, so that's pretty easy. Now inside of the scanner automation right at the top, the first thing that it's checking for was approval granted for trading today. So that makes sense. It's like I like to make sure that if I'm going to run it and I'm going to do all my approval stuff inside of one particular pre-market scanner, I do that, then I come back in and just really quickly check, do I have approval or not? And this allows me to make all those changes for how I want to do stuff inside of one automation versus having to remember to go through every automation and check, is it a Fed day? Is it whatever? I can just do that in one automation. So that's why I like doing it. Now, the next thing that I do here is I go through a series, and you can see that it's kind of like a waterfall progression in the sense that it kind of waterfalls down from these different levels of scan periods. So I go through essentially 3 scan periods in each of these automation runs, and that's where it gets the waterfall name from. That's how I call it that way, because it just kind of seems like a waterfall progression that it's going through. The first thing that it's checking is the market inside of the first scan period? Now, this is where we actually can set the times that we want to check for these particular types of conditions. And this is what's really cool about using this, is that if I set this inside of my bot, it will only check for these conditions during a certain period of time. So let's say that's from 10:30 in the morning until 12 o'clock noon or something like that, right? That could be my first scan period where I say, look, if it's between 10:30 and 12 and where the market is inside of this scan time, then look for this type of position. And once it's outside of this scan time, the bot skips over this one and it goes to the next scan period. And then it says, look, if I'm inside this scan period, the second scan period, then check for this type of position. And this is where it's going to be different, because remember, the peg research is based on different times of the day, pegging where the market's going to be at the close. So the peg data is different at 10:30 than it is at 12, or it is at 2, or whatever the case is. So now I can say from here, from 12 until whatever, 1:30 p.m., right? So from 12 until 1:30, check for this type of position, and so on and so on and so on. And so that's kind of the structure of how the automation works itself. So let me jump out of here really quick. And then if you go down into the settings, so I put this in my setting notes. You can grab it from screenshots out all over the place. We have it on blogs, whatever. But this is kind of the peg research that I'm working off of for this bot. This is the one that we published about a couple weeks ago. It's always refreshed and new inside of OA Labs if you want to get the latest copy of it. But here you can see the peg research. So for example, if you are trading in the last 180 days and you look at 5% on either side, so did the market peg within 0.5% of where the price was at any time during the day, then you can see from basically 10:30 a.m. until about 12 o'clock, it was 77, basically 77 to 80% of the time the market would land at the end of the day within 0.5% of the 10:30 or 12 o'clock price, or whatever price period it was in there. So that becomes my first scan interval. So I would look at that period and say, okay, this might be my first scan period, because all the probabilities are basically about the same. So you could kind of lump these together into an initial scan period. And then you could take another group of them and say, okay, these are my next scan periods, and then another group, and then these are my next scan periods. And this is where you get the first, the second, and the third scan periods. Now, these are totally flexible how you want to create them. It might be different for different levels, like it is for me, where different periods like the 0.4 and 0.3 might actually have different times that you want to scan. It might not be the same time period. So it is a flexible input inside the automation. So if you go into the actual settings of this particular automation, this first one here, you can see that I'm targeting 0.5% out of the money positions. The first scan period ends at 12:30, and we'll go into the automation. You can see how this kind of connects the dots here. And the first scan period's required reward to risk is 45%. Now, the reason that it's 45% is because if I'm looking at 0.5% out of the money, and I'm looking at trades between 10:30 and 12:30, then this is what's telling me I need to collect enough premium to cover the risk of those potential trades and their probability of success. So if I go back down here, you can see, let me just try to capture this in one good screenshot here. I hope I can get it for you. There we go. All right, so 0.5%, that's the scan period, or the out of the money range I'm looking at from 10:30 to 12:30. Basically, the average, you could call it the average probability, is about 80%. You can see it's a little bit lower in the earlier times, a little bit higher in the later times, but it's about 80%. So if I go to my favorable reward risk quick reference guide, you can see 80% means that at minimum, I need to collect a risk to reward of 25%. Now, I am trying to shoot for higher than that. I don't just want the necessary minimum. You can, of course, change them to whatever you want. It's your own personal trading style. I'm not telling you what to do. but I shoot for something higher than that. If you do 25%, you're going to be right on that kind of fringe, and I don't like to be on that. I like to take big, fat, yummy looking trades that my bot can take in where the premiums more than cover the risk. So I go for some higher numbers. It's not always that it's, 15% higher, whatever the case is. It's just, do whatever you want to do. But this quick reference guide hopefully should help out that if you're going to get an 80% win rate in your probability, then you at least need to take in a reward risk of 25%. So again, going back up to where I have this one set for that first time interval here, you can see at 0.5%, that stops at 1230. I'm trying to get 45% reward to risk ratio. Now, the second time interval basically goes from the first time interval to the next one, which is the second scan period, and then that one ends at 130. The 130 period, the second required period, I'm looking for a 30% risk to, or reward to risk ratio. So you notice I'm kind of slowly stair-stepping this down as we get closer to the end of the trading day, which makes a lot of sense, hopefully, because premium's starting to decay. The market doesn't have enough time to move, right? So if I enter a trade at 1030 versus entering a trade at 130, that's a major difference for a 0DT trade because I'm entering that trade later in the day. So that middle period here for 0.5% was around 130. It goes to 130, so 1230 to 130, or right after 1230 to 130. You're kind of looking in this zone right here. And so that's about 85, 90%. So if I go here to 85, 90%, which is down in this range and kind of goes for the rest of the day, you can see the minimums are 11, 18%. I'm targeting 30. So I still want, even if it's later in the day, I still want a really good trade. A trade that takes in enough premium to compensate me for the risk of trading that position for the rest of the day. So again, you could adjust this if you want to. You could turn yours down and say, look, I want to go 25%, or I want to go 20%, or whatever the case is. It's totally up to you how you want to do it, okay? And then for the last part of the day, for the third scan period, we're looking at basically that scan period ending at 345. So you're going from 130 to 345. I'm still looking for 30 all the way. Now this is different for some of the other ones, which I'll show you. But for this one, which is 0.5% out of the money, these are the metrics and criteria that I use. Now again, I run this and I ordered my automations because you can move these automations up and down. But I ordered my automations so that the one that runs first, the first one that runs, is looking for the widest possible iron condor first. So it's always looking for, can I get 0.5% out of the money? And if I can't get out of the money by 0.5%, then the next automation runs, which is the exact same automation just with different inputs. And this time it's looking for 0.4% out of the money. So you can see I'm kind of stair-stepping this in. It's kind of like where you can get the idea of like an accordion where you're moving this in and you're saying, look, I'm looking for 0.5% of the money. Then I'm looking for 0.4% of the money. Then I'm looking for 0.3% out of the money. So if you take a look at this one here, this one's 0.4% out of the money. First scan period ends at 11:30. And now I'm looking for a required reward to risk ratio of 70%. So why am I doing that? Well, let's go down to our little table here. You can see if we're at 0.4% out of the money now, and that scan period ends at 11:30. This is that first scan block. So basically from 10:30 to 11:30, you can see it's about 66 to 70% probability of success that you pin or peg the SPX price at the end of the day within 0.4%. So if you go to that probability of success, which is kind of in here, you can see that you're looking at kind of 50 to 43 as your minimum requirement for that. So what we're doing here by taking this one is we're looking for something significantly more here for this one. Now again, that does mean that you might take less trades overall, and I'm comfortable with that. If you don't want to take less trades and you don't want to have periods where the bot doesn't trade, or you definitely want to try to trade every day, you can definitely move these down. And maybe you might move that down to, I don't know, what was this one, 65 to 70, maybe you move it down to 60%, something like that, okay? And that's all we're doing. So the same process kind of repeats for everything else. We go through different scan periods. So our second scan period ends at 12:30. We're looking for stuff between 11:30 and 12:30 at 60%. The last scan period ends at 2:30. So that's the third scan period that we're going to end at that one, and that's 45%. Again, you could go make these go further into the day if you want to. Sometimes I do, sometimes I don't for different trades. So some of these ones I want to get further into the day, other ones I'm not so, comfortable with. I want to, move these around a little bit, but again, it's totally up to you how you want to do it. So inside the automation, all it's doing again is it's going through checking to see if it has been approved for trading. Is it inside that first scan period? And if it is inside that first scan period, then it's looking for a iron condor position that's exactly at your target. So you can see it's got some inputs for the actual target. So out of the money target, right? It's looking for those potential targets, whether it's 0.5%, 0.4, 0.3, whatever you set it as. And it's looking for that position and then trying to see if that position has a risk to reward that's greater than your first required risk to reward ratio. So if you're in your first scan period, then it's going to look for the first required reward to risk ratio for that potential trade. And it's also just going to quickly check and make sure the bot's not already opening a position, because these things are running fast every single minute. So it's not going to double up on positions, right? And then the second scan period is looking for the second required reward to risk ratio. And this third scan period is looking for the third required reward to risk ratio, and on it goes as it goes down the line. Okay, so that's basically what it's doing. It's doing that every single time as it's running during the day. As soon as the market opens, it gets approval, then it's going through this waterfall sequence. Again, what I do here is I run the furthest out automation first. Then the next automation I run is 0.4%. And then the last automation that I run is 0.3%. So the entire day, I'm checking furthest out for each scan period, then checking next one in, and then next one in. As long as I hit my numbers for these, I'm okay with it. Sometimes it takes 0.3s, sometimes it takes 0.4s, sometimes it takes 0.5s. It doesn't matter as long as I'm getting enough premium to cover the risk and the probabilities that we published in the PEG research. Now, the last thing that I do inside of this automation or inside this bot is I use this automation here after any position opens. Now, a lot of people have sometimes had trouble with this action inside of their automation. So I want to show you how I use it. But again, I use this automation which runs anytime a position is opened in the bot. So it does not run continuously. It is just triggered by a position opening. That's it. So as soon as a position is opened, boom, this automation runs immediately that the position is opened, and it runs one time. And what I do inside of this automation is I'm setting the new position tags for how far out of the money the position is. And the reason that I like doing this is because then I can use this later on for analysis using the analyzer, and I can say, okay, any positions that were 0 DT and tagged as 0.5% out of the money, or 0.4% out of the money, or 0.3% out of the money, or whatever the case is, then you know which maybe subset of groups might be working better. And you can see kind of the P&L diagram of different subsets and groups. So all it's doing is that as soon as the position is opened, and here what we're doing is I'm not selecting a position in a loop or a lookup. I don't even have a position loop running because I'm not trying to loop through all my positions. All I'm looking for is just the opened position. And so you can see here we say only available in automation scheduled with position open trigger, which it is. I'm looking up just that open position. Just tell me what that open position was. Don't worry about any other positions I have. I don't have any other ones in the 0 DT bot anyway, but it could work for other ones if you do it. And then I'm going through a progression to see if it's more than X percent of the percentage out of the money. And you can see, again, I just do a little kind of mini waterfall. If it's, basically 0.5% or more, then I tag it as 5 OTM. That's the way that I do it because you can't do percentages and tags. And then if I do 40 to 49, then I tag it as 4. If it's 30 to 39, then I tag it as 3, right? So it should be any of those. It really should not even open a position that's outside of this spectrum. So if I find a position in the off chance that's outside of this and never tagged, I know that something's up. I got to adjust my automations or make them more aggressive or whatever the case is, but haven't found it yet. All my positions have been tagged appropriately. So if I go to my positions here, you can see I get these ones here. These are the out of money ones. These are FOMC trades, so they're tagged that way. And then these ones are out of the monies as well. You can see the different out of the money percentages for different ones. So hopefully this helps out. As always, if you guys have any questions, let me know, but I'll share this bot template inside the community so you guys have access to it. Please make your own versions of this, add different automations to it, share it back to the rest of the community. We all kind of learn and grow by doing this together. And I hope going through this helps out. So until next time, happy trading.